Welcome back to the late day wrap up, of which we have plenty to talk about today. But first and foremost, a sincere apology, as apparently on this morning's video, looks like Apple users were shit out of luck. So I don't know what that was all about, but apparently people using Apple devices or using Apple native like browsers like Safari were having a lot of issues watching the content. So I do apologize about that. I don't have any control over it as far as I know. I don't know what the solution is except for throwing away your Apple products and joining the PC race. Anyways, with that said, I would like to wish you the best of the best and the happiest of the happiest in a more sincere tone. And of course, being that it is the late day wrap up, I should denote that this is going to be a more streamlined version of, there's going to be unique information on this one as well. But if you want the more in-depth information, if you want the more detailed analysis, definitely check out this morning's video or the long-term analysis playlist, of which I uploaded 2 videos into it this past weekend, with another big one to come soon enough. Anyways, with that said, let's start off with Dixie and go over all the major US indices and then a little bit of Bitcoin action as well. So starting off with Dixie, we did see that move down to about the $90 base that we did speak about over the past couple days. We did see a week down, looks like, 90 and about 11 cents, it looks like, of which a nice little bounce upon it after that. And what do you know, still trudging along the overall range on the weekly between about 91 bucks to the upside and 89 3/4 to the downside, of which I'm still looking at this as a potential macro bottoming region as long as Dixie holds this region on weekly closing basis. And seeing as we did just get a bounce off of the short-term maybe not so much short-term, but medium-term downside range, I would be looking for this one to pop back up and likely test somewhere around just below 91 bucks, maybe about 90.80ish to 90.90ish region. So a little bit of upside in the short term here, which is going to put downside pressure on price action on anything that trades against the dollar, which is pretty much everything in the world. But I don't think, or at least I wouldn't look at that as massively actionable until we actually see a move outside of the range. So in this case right here, obviously if Dixie breaks below the 89 3/4 region to the downside, that's going to lead to another continuation phase alongside a death cross on the weekly. But you could always say that that's, we played a lot of that out. But more importantly with that, that would be when I just start to get massively bullish and just everything else has, the dollar is going to create it once again. At the same point in time, if Dixie does take out the last weekly high or just closes above this $91 pivot, then I would be looking for a big move back up to about the 92.5 to 92.25ish region, of which that is going to put downwards pressure on price action for all major assets that trade against the dollar. Of course, it doesn't mean that they're going to be destined to go to the downside, but it's going to make it a little bit more difficult. So the weaker ones will come down naturally, and the stronger ones, might not be as strong. But if you're looking at it relatively speaking, you would be looking for the stronger ones to continue to kind of hold everything up, and in the weaker ones to get a bit punished. So in this market dynamics where we are basically seeing everything in this fucking mother go to the moon, you're probably going to see a little bit of a turnaround right there. But again, this very likely does take its time, as we typically do see these macro bottoming sections take about 3 months or more in the past. We can go back to this 2018 macro bottom right here, about 3 months, as you can see. The time before that we saw a macro bottom was way the fuck on over here in 2011, same thing, about 3 months. The time before that, back in 08, you might remember that one, about another 3 months, a little bit more than 3 months actually on that one. And then the macro low that we saw before that was way the fuck back on over here in 95, and then 90, and then the year 1990 before that. So with that in mind, you can see that we have been within this region for about 1, 2, 3, 4, 5, 6, 7, 8, working on week number 9 now. So I would say that we're just finishing up about 2 months within this region. If it goes for another month, I'd say, then that would if it goes for another month, more importantly by not breaking the downside resistance or even not breaking out in general, then I would say that it still has the makings, historically speaking, of a potential macro low. And that's at the point when I'd feel quite comfortable looking at 92.5 to 92.25, and probably even continuation implied above there over time. Anyways, with that said, let's go into the major US markets, the major US indices, starting off with Nasdaq as always. Are we seeing new all-time highs there once again today? It looks like maybe we are. Actually, no, we're not. Or are we seeing new all-time highs today? Well, still kind of trudging alongside the top side of this. Here's what this looks like on my trending charts over here. So let's just pull this baby up. Where's my Nazis? Where's my Nazis? That can be interpreted improperly. Let's see. Yeah, all major moving averages chasing right now. And what do you know? DMI ADX is once again the harbinger of potentially good things to come. We do see that the DMI Plus is technically dominant right now. ADX is coming up from a very, 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 very low read. So technically speaking, if we do see this next move, this next tick above the threshold for the the DMI plus and it gets a positive slope while the 8X continues to strengthen, that's going to be a damn good signal. This is going to actually lead into another continuation phase. Now, I would say that that's more or less formality here based off the weekly, as this is, I wouldn't say very clearly, but very likely, and we'll put it that way, very likely leading into continuation phase right here as well, just running above the top, or sorry, running towards the top side Toronto band. And if we do look at it on these charts as well, we do see that momentum oscillators are all looking more or less fine here. We do see that daily RSI. I'm sure that people are calling this bearish divergence. It is not, because this is not confirmed as a local high just yet, and would have to at very least close below, like, let's call it 13,750-ish region in order to even be considered such. But more importantly, we do see that daily SMI is still keeping the momentum to the upside as long as we're above 13,332. So we'd be looking at this as, yes, more or less likely to continue its slow trudge northwards. And actually, we don't have any divergences here to be spoken about, so fair enough. Sideways and up is probably the name of the game, and I would be looking at the ranges between about 13,750-ish region to the downside versus our current 4-hour high at about 13,900-ish region for a nice continuation point. As long as it's kind of running between those two regions right here, it is still a bullishly biased trend, as you can see, and I would generally be looking up further north towards our next fib extensions for a little bit of algo targeting, of which I do believe we have the 3-spot extension somewhere around 14,250-ish region would be the next sort of medium-term target on this one. So probably not happening today, probably not happening tomorrow, maybe for the next few weeks. I would be looking for that one to make a leg up there. Again, assuming that structure is not broken below 13,750-ish region. Anyways, SPY futures, this one's actually a little more strong in the shorter term timeframes, I do believe. This one did head up a little bit more aggressively earlier today than the Nasdaq, but at the same time, still riding above the 21 exponential moving average on the 4-hour right here. We do see that momentum oscillators are doing what? More or less sideways and up. Does look like a little bit of short-term downside here, however. Here's what this one looks like on our other charts as well. And let's go to a daily really quick. See what our momentum oscillator is saying right here. Yeah, same sort of potential signal building up on the DMI ADX. So I'd really be looking at the DMI ADX for both SPY futures and NAS futures to kind of judge this next move, because we could actually see a confirmed signal on this next tick to close out today's daily. So keep an eye on that one. If that does come to fruition, then yes, I'd essentially just be looking for, continuation of trend, you might say. Moving on to gold. What do we have with gold? Gold bouncing off the same area that we bounced off of, I think, last week. Oh, well, let's go off to this chart over here. Where is my gold? Where's my damn gold? Found it. Nice one. Okay, fair enough. So as we said yesterday, while I wouldn't necessarily take the trade, I mean, technically speaking, I am supposed to be bearish off of a formation like this. Problem is, I wouldn't take the trade myself. Now, that does not necessarily mean that I'd be bullish either. I'm only bullish on this as far as an actual moves goes until we get a closure above the 21 exponential average or wherever 1850-ish region does rely, as they are pretty much one and the same right now. Anyways, as you can see, another bounce off the 55 exponential average to the downside. What does that imply as far as the actual oscillators go right now? Not really getting much from this, actually. Yeah, I'm actually not really getting much from this. Gold's kind of like the odd man out. While everything else is getting like a free pass to rally if it wants to, gold is not joining, which I do think is a little bit of a concerning factor, especially in this environment. What does the monthly looks like? Monthly does not look all that hot as well, but I think another healthy amount of I don't know on this one. It is starting to turn around to be more or less bearish here, but short term, does it rally back up? Probably does. Yes. Does it rally back up towards 1835 or 1840-ish region? Yes, but as you can see, our downtrend, is obviously intact as long as below 1850-ish region. So again, I still kind of remain with the same things I've been saying over the last week and a half to 2 weeks now. It's like, technically speaking, yes, I should be bearish here. I wouldn't really feel compelled to take the trade. Obviously, if we do break below weekly support, then I would be looking at a move towards just below 1690 or 1680-ish region. However, I don't really think that this one's not the most obvious of all time. The only obvious thing that I'll be looking at right here is above 1850 to 1855-ish region. Then yes, I would be looking for another $100 extension, and probably even more on top of that. But that would be the next easy target. Until that happens, I'm more or less just not interested in looking at this. Anyways, moving on into, do we want to look at Bitcoin now? Is it Bitcoin time? Let's look at some Bitcoin. So we identified on yesterday's late day wrap up, and then also on this morning's follow up, we did see that that CME chart was once again kind of the most obvious chart to be looking at. And what do you know? We did see that move into the $51,000 region thus far, but I'd still be looking for this one to play out. This hidden bullish divergence does have 1, 2, 3, 4 stabs. That's usually pretty damn good right there. And I would say that this RSI signature to begin with is actually rather constructive and strong read back in the bullish control zone, back above the exponential potential, and playing off that divergence as well as momentum does turn up as well, as long as we're above 48,850, which, to be fair, is about $1,000 away from where CMEs are trading right now. So a good buffer zone right there as well. On top of that, do we have breakage of structure? Technically speaking, yeah, we do. Technically speaking, yeah, we do. I mean, no matter which way you kind of cut this one at this point, yes, we have seen. I would say technically a breakage of structure. Now, have you seen a volume supported breakout right here? No, I would not say that that is correct. But if we do go into open interest, we have seen open interest added since we even spoke during this morning's video when it was about 8.25 billion. It looks like so added on another almost 200 million to that number, and with price action also falling through to the upside, I would say that this is very, very likely to continue onwards and forwards. We do still have a measure move off of this ascending triangle pointed up a little bit north of 53,000 bucks. That is also in line with our next, where's my next thingy over here? I think it's on this chart. Yes, indeed it is. That would be in line with the next sort of topside Toronto band on the daily, as well as a 2-spot extension, a little bit lower than that to be fair. But of course that is CME, so we should actually make a fresh one for this one right here. And shit, do I really want to do this right now? We'll do it right now. Why not? Why not? Let's just get a quick extension going on right here. Okay, and where's the 2-spot extension? That's coming in right around 52, we'll call it. Yeah, about, sorry, oops, let me get this actually right, because it actually does make a significant difference. There we go. Okay, I think it's about as close as it's going to get. Yeah, about 52,000 bucks is confluent with the topside Toronto band, so that is still a more short-term, or maybe not short-term, but medium-term target, meaning that if CMEs do head up there, I would look for an initial pushback, kind of similar to what you're seeing right now, where Bitcoin did initially test the $50,000 region and quickly rejected from it. But I don't look at this as like a very actionable rejection. A lot of people are going to say, but there's a quick sell-off. We just went down $1,000. No. Well, I mean, technically that is true, yes, but $1,000 within the context of a $50,000 trading asset is minute, to put it bluntly. To put it bluntly, the only way that I get bearish on this, looking for a move even down to like 45,000 bucks, is by coming back down and breaking the higher low structure, which would imply that CME specifically would have to come back down below about 47,500-ish region on spot price action. That same territory would be 47,100-ish region. If that condition is met, yes, I would be looking for another move back down to about 44,000 or 44,500-ish region, and then probably a small bounce there. And then if that area breaks, that's where I actually do switch around my biases to be not just short-term bearish, but medium-term bearish, and looking for another $4,000 to $5,000 move to the downside. Anywhere between about 39,000 and 40,000 bucks would be about right, and then I want to see it in real time after that. But as it is right now, I mean, I think that you're very likely seeing just continuation in front of your very face. Looking at our 4-hour RSI on spot price action, very, very strong right here. Not as strong as CMEs, but confirming that same sort of 1, 2, 3, 4 drives of hidden bullish divergence. This is consistent all the way up to, oh, did we confirm this on the 12-hour? I think we did. Yes, we did. 1, 2, 3 drives of hidden bullish divergence on the 12-hour also confirmed. This might be going up. up only. It's moon boy time, I guess. Again, always want to titrate that with a point of failure, as we did denote right here below the last higher low in the 4-hour, and then obviously the pivot low on the medium-term time frame, so about 44,300-ish region. But as long as those conditions are not met, I'm generally bullish on all time frames, and this one's really making a lot of people wait right now, but technically speaking, we have not seen breakout. Well, it's starting to put a little more volume on top of it. Let's see, how much exactly is this? 1.1 billion, it looks like, in the last 4 hours of trading, with 14 minutes and 45 seconds left to go. Again, I'd keep the eye on CME just because I think it's a little more of an obvious chart right here. This one, however, not closing on the next 14 minutes. This one closing in the next 3 hours and 24 minutes and 33 seconds. So keep an eye on this one. I do think that this one's still the chart to be watching, and I do think it's just generally easy to be reading. Is there anything on the daily to be aware of right now? Daily looks like continuation. Anything else? Just kind of looking around here. No, not really. So again, I'd keep an eye on those pivots. Of course, not anything is guaranteed in trading. That's why we have failure points. But in this case right here, I'd just generally be bullish in the current posturing of this and look for continuation to the upside. Again, next targeted region would be anywhere between about 51.5 to 52,000 for spot price action. For CMEs, raise those two numbers up by about 500 bucks. And while I would be looking for a little bit of a short-term pullback from that region, ultimately, I've almost never see I almost never see reversals at the 2-spot extension for anything. Come to think of it, so what I would be saying is that, you know, very likely after a short-term, maybe even medium-term pullback from those regions, I would be looking for the typical algo targets get hit somewhere around the 414 and the 618 on that next drive. How long does that take? Who the fuck knows? Doesn't really matter. But I would imagine that assuming that this breakout is fully confirmed with actual volume support, then I would be looking at that as very much, I don't know, probably like that happen within the next week or two. Anyways, with that said, also daily. Keep an eye on this signal right here. DMI plus did get a positive slope. ADX is all strengthened as well. If that continues on into today's daily total closure, I'd imagine that's going to be more or less formality, but that'd be another good signal that yes, $51,000 is on the menu, and then we come back tomorrow and see what's up. So with that said, hopefully the Apple users can join once again. If not, definitely let me know by not letting me know that you can watch the video. And with that said, I wish you well. Take care, and see you soon.